hello. Welcome back to another exciting day. Okay. Today we are going to be talking about personal financial literacy. All right. What that means is we're going to discuss the things that adults do all the time. Sometimes kids do it, right? We are going to talk about how to manage our money and how to manage our lives. We're just going to talk about the vocabulary today. We're also going to be talking about the way that we able to spend money, the different types of assets we have, the abilities we have to spend money. We're going to talk about differences in a few of the ways that we actually spend money. We're also going to be talking about taxes, uh, the different types of taxes, and also how we get paid, the different ways that we get paid. Okay, so we're going to go ahead and jump into the vocabulary. Uh, we're gonna go ahead and go through the slideshow, and with inside the slideshow, I am going to explain everything. Okay, so our target today is I can learn and define new vocabulary words related to personal financial literacy. Okay, the text that covers in this thing is 5.10a, 5.10b, and 5.10c. Some of the other TEKs that we have learned are covered in fourth grade, so we're just gonna go through them. I am going to go ahead and print out my little laser pointer to point out a few things. The words to define related to personal financial literacy. All right, we have our available balance, okay, balance a budget, a check, credit card, debit card, expense, personal financial records, gross income, net income, payroll tax, income tax, property tax, sales tax, and a transaction. Some of these words we are just going to talk about them. They will not have a definition for them, but I will explain them uh, with an extension relating to all the other words. Okay. So, what is available balance? Well, available balance is the amount of money available in your account for you to spend. It could be for a person, a business, or organization to spend. Uh, so, let's take it to a lower level. Let's say you go to the store with $10 and you buy stuff that's worth $5. So your available balance, that's how much money you get left, is $5. Because if you spend five and you had 10, five is your balance. Okay. So, but when we're talking about money in the bank, we might be talking about more money. We might be talking about thousands or hundreds, even a million. Okay. So the balance, available balance, is different for everybody. What is a budget? Budget is the amount of money you must spend to pay your bills. Okay. This is the amount of money you can afford to spend without going over the amount of money you owe. For example, if I get paid $2,450 per month, I can create a budget with this amount. I cannot spend more than $2,450. I will go over my budget. And your budget can also include some savings you have, okay? But all that is inside that $2,450. A balanced budget. All right. So in relation to the budget, a balanced budget is when you get paid, you have to split your money. You split your money into bills, okay, and also your savings. If you could follow my little highlight. So this right here represents your money that you make and your bills over here. It has to be balanced. You cannot spend this, right? You cannot spend more of this than you have to pay for this, okay? I have seen some people who buy cars and they can't pay for it because the car is more expensive than what they make. So the definition actually is to reconcile your budget to ensure the amount of income and expenditures are equivalent. The word equivalent means they are equal. The amount of the money that you make and the amount of money that you spend have to be equal. Okay. Uh, for example, $2,459. Everything I buy, including my savings, must equal to $2,459. Okay. I cannot spend more than I make. All right. Check. Okay. A lot of you may see check, may not have seen check. Okay. Back in the days, in my old days, okay, not that I'm old, but in my old days, we used checks a lot before technology. This was a form of technology where you write a check and you tell your bank, pay this amount and take it out of my account. Okay. So it's a written document to tell your institution that to pay a specific amount from your account to a specific person or organization. Let's say I go to Walmart and I buy things and I don't have cash, I can write a check if you have check. A lot of people don't use check anymore, but a lot of people feel that that's is the safest way to keep a great financial record. Okay, because it's on paper. They could pull it out and say, well, I spent this day and that day, and they can also help them do their budget and also help them do their bookkeeping and taxes and so on and so forth. Okay, there's advantages to working with checks. Checks is you don't have to use cash. Okay, it's safer that way. People don't have if they steal your checkbook, uh, they may not be able to spend your money. Uh, if you have checks, you could buy basically anything you want to and not have to use cash or credit cards. All right, you could just use your check, and it comes straight out of your bank account. Credit cards is very popular. Okay, credit cards is a card that can be used to borrow money from a financial institutions, stores, or other businesses in order to buy products and services on credit. All right. Now, what's so good about credit card? We're gonna discuss in the next slide. All right. What's good about it? The advantage you get, you can buy anything or everything you need without cash. Okay? Without cash. But the bad thing about it, not really necessarily a bad thing, I call it a bad thing because I'm money savvy. Uh, I will owe that money, right? Plus interest from borrowing from the bank, right? So a lot of people do not like to use credit cards because they lose money because they borrowing money. It's called that short borrowing, right? I buy it, I use my credit card, and I pay the bank back. So, but they charge you interest, and I don't like that. Okay, I'd like to keep my money, so I use either cash or my debit card. Come to think of debit card is a bank card, different from credit card. Is a bank card issued by a bank or a financial institution that is electronically linked, so it's connected to your bank account, right? To your checking account or savings account for the purpose of making bank transactions, making payments for services, and or making purchases. So you could buy stuff with your debit card. Great thing about it, it is your money, right? It is your money. It's like spending cash, right? That's why I have that little picture right here. A debit card is your own money. It's connected to your bank. So whenever you spend something or you buy something using a debit card, it comes directly out of your bank account. And it's also instant, okay? You don't have to wait like a check or you don't have to wait like a credit card for it to come out. Pay your bills. Your bills is what we call an expense, any bill. Uh, and it doesn't have to be necessarily be bills. There's some stuff that we spend on, and it's not a bill. It's just something that we need. Like when we buy gas, when we buy food, uh, bills are mostly things that we owe, like mortgage, car payments, insurance, cell phone bills. Okay, but also other expenses could be you go to the movies. That's an expense. You go to the amusement park and you spend some money there. That's an expense. Is any type of goods. Okay, so expense is payment for goods and services. Payroll tax. Now we're getting into the money. So when you work, okay, uh, when you work, your boss collect money uh, uh, from your check, all right, and it's paid to the federal government on behalf of you, for you. So they take the money for you from your account and they pay it to the government for you. You don't have to do anything, okay? So when you work, so that's called a payroll tax, okay? It's called a payroll tax. All right, a payroll tax, okay, is also called income tax, okay, also called income tax, is money paid by an employee or business to the federal government based on individuals' incomes, and it is required by law. You have to pay your income tax, okay? You have to pay your income tax. There are differences in the way that we get paid, okay? The way that we get paid are two ways. We get gross income. Gross income is the total amount of money that you came, and that is before taxes, before they take any money for, you know, your insurance and other deductions that come out your paycheck. So we call that gross income. So it's called before your taxes is taken out, before income tax is taken out, before everything is taken out. That's what it's called. Okay, it's called gross income. Now, after, right? So imagine this scenario, okay, where your gross income is this, okay? That's the total amount of money that your boss owes you. But when they start taking money out, okay, when they start taking money out, and those maybe for taxes or other deductions, you will receive this, which take us on this side, which is called net income. That is the income that remains after the taxes and other deductions are taken from an individual's gross income. Okay, in this scenario, we see that we make uh, we make this amount of income. Okay, this amount of income, which is 148,750. Okay, and they take this money and they multiply by 0.23, all right, 23 hundredths of a penny of a dollar, 23 hundredths of a dollar, and it equals to 34,213. All these are expenses or taxes, right? Then when they subtract that amount, you get the remaining, which is called the net income. That is the total of money that goes in your pocket. This right here is the total amount of money you make, okay? This right here is the total amount of money you make. Where is it? It's on this side. So you make income is 148,750. That's the total amount of money you make. Now, when they take out expenses like taxes, which is 34,213, the net income is how much you get paid. It actually goes in your pocket. Okay, so that was the slideshow. Make sure that when you guys make sure when you all see this slideshow, you guys take notes. You ask yourself questions. Okay, what can I relate this information to? You know, how do my parents? You know, can I talk to my parents? Ask them questions. Okay, how do they pay their bills? You know, what kind of payments do they use? All right. And I myself, as an adult, I like to use my debit card to pay for stuff. Okay, and I treat it as a credit card, and because it goes, the money is taken directly from my checking account. Okay, and it's good, and I don't have to uh, borrow money from anybody. Okay, so it's a good thing. So ask questions, talk to your parents, see if they could help you out, because it might help you understand this a little bit better. Okay, all right. Wish you guys were here, and I will talk to you guys next week.